Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to hover around the 71-cent handle, but not quite breaking above that key level of 71.35. Although it has posted its strongest level since June, a softer US employment, inflation and retail spending data continues to weigh on expectations for a further Fed tightening. The probability of a September hike has fallen to around 30%, down from more than 40% a week ago, keeping a broader US dollar demand under pressure. Attention now shifts firmly to Australia, with the wage price index due on Wednesday, followed by Thursday's key employment change and unemployment rates. Employment surged to 76,300 previously, while unemployment held at 4.4%, making a labour report the biggest test. Nevertheless, checking the technicals, we can see the market is a little bit overbought when you look at the RSI. So I still feel the upside challenge could still find good supply around 71.35 and watch for profit taking above there, as many dips are still anticipated. Turning to the euro dollar, it still remains near its strongest level in 2 months after breaking above the 116 handle, with continued US dollar weakness around 99.60 supporting the euro rally, and therefore we'll see what the outcome from the Fed's minutes, as that will be the next catalyst. We can see a slight bearish divergence from the MACD and also the RSI. So this stab to the upside above 116 may be an indication that we could see a breakdown towards the region of 114.75 and reassess. The dollar yen, well, after these hanging men, the market is still persistent to rise and still inside this candle, so it's somewhat still neutral. I am still, although holding a neutral bias, keeping a very much focused that the weakness may return very sharply. It's quite surprising how stubborn this market is, as we know that there is still very much intervention risk building as we get close to the 160. Along with that, the market does fall very, very sharp and furious, and therefore we could easily see another repeat back to 155. Moving on to commodities, we can see gold, well, has taken a bit of a pause at 4,400, and the technicals are looking a little bit heavier than they were 24 hours ago. Keep an eye on this pattern, because if it does deteriorate, then we could see a move back towards 4,345.50 before a snap higher. And also oil's getting stronger once again, as the Middle East is still uncertain, and also the fact Hormuz risks intensify. So keep myself neutral, as the market is just not appearing to be holding a trend, and therefore this whipsaw price action to continue. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the day.